Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation for you. Asian session live market analysis on June 13th between 5 and 5:30 GMT. We will be tracking the market using the live market quote page, and we will try to see how exactly the market is behaving during this particular time by comparing the market levels, current market levels, to that of the high and the low, and also the net change, how far it has deviated from that of yesterday's close or the Friday close. So from there, we will try to read the intentions of the player. A link for the live market quote page. So you can also open it in a browser. And now focus the camera over that of the live market page. Currently, Euro is trading around 1.4344, 1.4345, 1.4293 was the low, 1.4356 was the high, and about 3 pips negative net change is seen. So during the start of that day, they just made a downward stop, and below that of the psychological level 1.43, and then gained the levels and formed a high, and they are simply holding it here. And it is holiday in Europe, so there could be reduced volume in the market. As a result, you come across subdued moves happening here. And in the case of GBP, 1.6227, 1.6231 are the current levels. 1.6217 is the low, 1.6244 is the high. Hardly you come across about 20 to 30 pips spread between the low and the high, and GBP is showing about 3 pips positive net change or 2 pips positive net change. USD Yen has gained a little bit, about 20 pips. 80.51, 80.54 are the current levels. 80.24 is the low, 80.67 is the high. They are just holding it below that of the high. 20 pips positive net change is seen. And in the case of, when you compare this GBP and Yen, which is a contrarian move, whereas Euro and GBP is a regular move. So, but since the moves are very, very subdued, about less than 30 pips, so we will not be able to call it as any specific type of trend. Then USD CHF is trading around 84.52, 84.55. 84.13 is the low, 84.67 is the high. About 24 pips positive net change is seen. So slowly, USD CHF is coming from that of the extreme bottom, and it has come to 84.50 area, and probably it may take several days to go to next level and things like that, because they are buying it. The players are buying it, holding at the lower level, testing the patience. So when they quickly gain about 50-60 pips, people come to buy. Then afterwards drop about 10 pips on a daily basis, induce them to liquidate the long, testing the patience, then take up to the next level. That is how they are doing it. In the case of Canadian dollar, is again holding at the lower level, 0.9767, 0.9771 are the current levels, 9768 is the low, 9796 is the high, 28 pips negative net change is seen. When the denominator currencies, Yen and CHF, showing positive net change, USD CAD is showing negative net change, and also Australian dollar is showing positive net change. You come across a nominal contrarian move that, excepting GBP, other currencies are showing USD gaining move, whereas the commodity pairs are showing USD weakening move. So Australian dollar is currently trading around 1.0540, 1.0543, 1.0523 is the low, 1.0562 is the high. 4 pips positive net change is seen. So altogether you come across very subdued moves during the start of the day, and it is almost 5 hours over completed from the start of the day, but still you do come across very little swings in the market. Probably because of the holiday, people are hesitant to commit positions here, anticipating no big moves in the market. So let us see what are the expected moves for today and also in this particular week. So During Japanese session, little bit of volatile moves are expected. That's what they made a downward move quickly and then upward move and then holding it. And towards close again, they may make some little bit of volatile moves. No specific direction could be set. Then during the European session, swing and slide moves are expected. Also during that of the US session. So then those who are holding higher level longs might come in for the long liquidation when the rise is not happening, because on Friday when they had dropped and a lot of people holding the higher level long still wait for the market to come back or pull back at the time they want to exit. And if the pullback is not happening, then they will try to exit. And also some more selling might come in when there is a pullback, and then the players could try to trap them as well. So the players are here to trap both the short sellers as well as the long holders. So once the trend becomes visible and if the traders try to decide along with that of the trend, then the players try to show the other way move. So which is very evidential now in the case of Euro. They made a big drop and they said that Greece problem, etc. on Friday. Then Monday they made a downward stop and quickly gained back the levels. So it shows that the traders are willing to short and the players are buying it. So we have to be very careful there. Then it is a holiday in Europe, so week beginning false move could be extended till tomorrow. So they may just hold the market and make a little bit of swings today and create uncertainty for that of the traders, either to do a buy and sell trade or a sell and buy trade. And many of the traders are willing to do sell and buy trade because prime supports are being breached and they act as resistance in the market. So they are willing to sell, and only if the pullback comes they are willing to sell. But the players may not show the pullback and then make a dip. Then afterwards the traders might commit. During the drop they will commit sell positions and the players are expected to trap them. So these 2 days we will come across some uncertain moves happening in the market. Now with regard to the expected market moves in this particular week, so till Wednesday we will come across the market could create the uncertainty and make some volatile moves and slide. Volatile moves and slide, but not a very big drop is anticipated. So they could just induce the long holders or induce those who are trying to take the lower level buy position to liquidate the long. Then afterwards from mid-Wednesday and Thursday, Friday, they are expected to gain the levels and induce the short covering from that of the traders. So whenever the trend in the market becomes visible, if you think the trend is the friend and try to take positions, and the players are here to trap. So we have to understand how they try to induce the market feel and also the sentiments in the market and act against that of the traders. And so you know that last week they created the bullish feel and finally using, even though there is no change with regard to interest rate decisions in Europe as well as UK, still they just dropped using some other excuse. And then people have turned negative and they wanted to sell Euro and GBP. So the players have to make the market functioning. So when all are willing to sell, the players are only the buyers. And if the players buy, you know that they are not going to leave the market just like that to fall. They will gain the levels and they just distribute it to that of the traders again when they come for short covering. So this is what's going to happen. And look, it might look like a very uncertain week. After that drop, the bearish trend is not continuing. So as I explained in the month of June, they are supposed to gain the level slowly and then later on they are supposed to drop during the month of July. But this particular month, they quickly gained the levels in a hurry. That indicated that they are just changing the plan and a lot of traders have turned short. And that is why they took it up to 1.46 in the case of Euro and 1.64 in the case of GBP. And later on, they just made the drop. Again during this drop, if the traders turn short, then they could make one more pull back like that and then continue the drop. So we have to keep it in mind that the forecast can give a overall trend of the market, and it has to be fine-tuned in relation to that of the traders' sentiments. And today is a holiday, we will not be able to, in Europe, so we will not be able to judge really the traders' commitments in the market. But as the market goes, we will be able to see how far the spread becomes the low and the high gets widened. If it is not widened, that means the market is not having much of a commitment from that of the traders. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market quote page. Okay, no question has come yet, only one question. What is your view on this week? And this I explained it, that Monday and Tuesday they are supposed to make the week beginning false move. That could be the drop. But the way in which they have done the drop in the case of Euro quickly and come back closer to that of the high indicate that the traders are holding sell positions from Friday. So the week beginning false move, they may not make it big. And today also another factor, namely European holiday. Because of the European holiday, you will find that the traders' commitments or the volume might get reduced, and that may lead to that of further only volatile move, either way moves in the market rather than a one-sided drop. And during the year session, those who are holding long positions on Friday or the previous days might come in for the long liquidation in the market when the pullback is not happening. But players are actually dropping and buying, keep it in mind, and once they have got adequate buy positions, they will just make a pullback. So don't develop a bearish feel and doctor said that it will go to 1.40 or 1.41, things like that. Then don't miss or don't enter wrongly in the market. That is what you can miss a trade. Doesn't matter. You don't lose anything. But if you enter wrongly in the market, that becomes the biggest problem. So wait for them to drop and see how far they are dropping it in these 2 days. Then you try to commit a buy position. See, doing a sell and buy trade at the lower level and doing a buy and sell trade at a higher level might look very attractive, but they are the trap points. So last time, that I was telling the same in the webinar, then from next day onwards, everybody started blaming me and telling that I only asked them to short. Because I said that I am anticipating a drop, but when all the traders turn sellers, when the players have bought it, they quickly gained the levels in the second week of June and started offloading at the higher level when the short covering comes. So that you have to keep it in mind. So I am giving an overall trend in the market and also what the players could do. And so you simply follow the overall trend and don't understand or just don't hear so that of what the players could do. Then you think that the market is falling, so we will take a sell here and later on find that you have taken the sell almost closer to that of the low. So higher level buy and sell trade might look lucrative, but that will become the trap later on. Similarly, lower level sell and buy trade might look lucrative, but that can act as a trap. So the best thing is don't participate in the market or avoid taking a position. Let them drop the market and afterwards you try to take a buy position. Then you will be able to really see profit. And that many of the traders find comfortable holding a long positions rather than holding a sell positions. So keeping in all those factors into consideration, I am just suggesting wait for the drop to happen in the market. And see, today they have just shown 1.42 and just a psychological level below that of 1.43 and holding it. And how much of selling pressure comes, we have to see. And similarly in the case of GBP, 1.62, they are simply holding it. And the downside is very limited in the market now in this time. The maximum they can go up to 1.40 or a psychological breaching of the level like 1.40, and just intraday some lower levels might be shown as a stop and move, and those things cannot be estimated so easily, and nobody will be able to say that, and it all depends upon the trader's stops. So if the stops are there, they will try to do the stop and you can understand how they make a quick stop and in 30 minutes time and go up at the time, next stop and time, and you know that lower level consolidation with the downward stop-ins. So the downward stop-ins will be very frequent. During such downward stop-ins, try to take a buy, and that will give you in this week some profit. Then later on, again next week, they are expected to gain some more levels during next week till mid-Wednesday. That is what I'm talking about is from 20th to 24th. So they will gain the levels again, and then during the last week of the month, you could come across some slide. So you are going to see some volatile moves throughout this particular month, and so there is no trending move as such is going to be set in this month. Then Chris, how do you see Euro GBP? Euro GBP, they took it almost that of 0.90, and then they started making the drop. Now 3 pips negative net change is seen. Euro is showing, GBP is showing positive net change, Euro is showing negative net change. But still, because of the subdued moves, excepting New Zealand dollar, no other currency is made a big move. New Zealand dollar, when Australian dollar was dropping, they just held New Zealand dollar in order to just gain the levels in the case of Australian dollar, New Zealand cross, and afterwards they just dropped it. Now, that is the only big action we have seen today. All other things are making subdued moves. So when the majors make subdued moves, the crosses may not make any big move as such today. Then Matthew. And Euro and GBP downside is limited. Yes. So they will not make any 150 pips drop and things like that on a daily basis. They may drop about 50, 60 pips or 75 pips and hold it. Then gain about 50 pips and then drop about 60 pips. That sort of moves are expected to happen. See, the quick rise and the quick drop, they have finished it last week itself. So, obviously, we will not come across a follow-up big drops of 150 pips net change, net permissible level on a daily basis. So, it is only an intermediate upward move before making a slide, and you know the traders who are holding mixed positions in the market. So the players will try to trap them separately and try to earn from both the higher level long holders as well as lower level short sellers. Alternatively, they will try to trap them because the traders are holding positions with a nervous condition. It shows very clearly the way in which they handle the market. For even a nominal data which is not considered as very important, they are making big moves. So that shows that they are trying to trap the traders very quickly on a single day and then reverse, just show the opposite trend the next day. That sort of quick change in the market sentiment they wanted to bring in. So it is not a Greece crisis sort of thing wherein for about 3 to 4 months they can just hold near low and try to go some more downward and things like that. Then Chris, right now CAD is near low without breaching. Does that make it a good buy or sell trade? Then you can buy Canadian dollar near that of the low, and always keep in mind you have to keep either a stop or a hedging order because they are here to make stop-ins. And if you feel that keeping a stop might be risky, then you can keep the hedging. And if you feel that you can keep a wide stop, then it is much more riskier than using hedging. Because the players with the identify the cluster of stops. And if your stop is also in the same vicinity, then they could hit it. Then Euro GBP direction. Euro GBP is expected to slowly slide And that is why you come across that euro is dropping more when compared to that of GBP, even though GBP is considered as a sentiment creator. They fall first and later on euro falls, but you find that more drop has happened in the case of euro when compared to that of GBP. So as a result, there will be a pullback and then drop, pullback and then drop. That is swing and drop, swing and slide moves are expected in the case of euro GBP. And Eric, you don't anticipate real movement until tomorrow. Not a real movement. It all depends upon the trader's commitment. And if the traders see in Asia, they think that it is a holiday in Europe, so there is no point in taking position. And those who are in Europe, and if they are not willing to take positions, then in US they think, okay, it was a holiday in Europe, so not many positions are taken. What is the big deal in taking the positions in the market? So it is a question of herd mentality. So automatically you find the market becomes subdued. Then JAG. Do you expect euro to drop to 1.40 level before rise? No, I am not committing anything now, sir, because the market, they are just created in such a way that they wanted to make either way moves this particular week. So probably by month end we may be able to see, but it will be a prolonged time. Till such time the market is expected to make sideways moves. Then Herman, you have not shown the high-low. Oh, sorry, I will show that. Then Roni, since there is low volume, do you expect a rise? No, they may not rise big, but they may rise just to create the feel about 30 to 35 pips. DDPD, I just joined, okay. High low prices I will refer because they are not breached, so I thought I just skip it. Then ROM. What will happen to Euro GBP in this week? Both Euro and GBP are expected to fall. No, when Euro and GBP expected to fall, still if Euro drops more, GBP drops less, then Euro GBP can come down. What do you think is drop Euro? Then Charan. Do you see trend reversal for this quarter? No, not immediately, sir. The market is expected to make either way moves in this particular time frame. Then Ruben. Earthquake in New Zealand. Do you think short positions is good to trade? So we have seen several times, like even a tsunami in the case of Japan, and later on what happened. So don't try to relate it to that, but they are just handling Australian dollar and New Zealand dollar, and they made the drop in the case of Australian dollar, and they were holding New Zealand dollar, and probably earthquake could be used as a trigger, and further they are dropped. And can you measure? You can measure earthquake in Richard scale, but can you measure for this sort of earthquake how much per pips the market has to fall? If you can measure it, then probably you can take short. Then Jason, what about Australian dollar? Okay, before that one more question. Are we able to take trade in USD CAD? It has been in, out to the initial low more than 3 hours, yes. So Canadian dollar, they are just holding it near that of the low, and 27 pips negative net change is seen. But don't expect too much of a rise also at the same time. They wanted to hover around that of 97 area, and probably they just dropped another 30 pips earlier, and they wanted to gain 30 pips. And for a small swing trades, you can take positions. Then Jason, what about Australian dollar? Australian dollar, they had dropped and to 1.05 area, and they wanted to swing around here. They might make an upward stop and as well as a downward stop. So today, because of the thin volume condition, they will try to make an upward stop and a downward stop during the course of the day. So session start may be a downward stop and session close an upward stop and above the high. That is how they could gradually increase the width between the low and the high, because at this moment you find the spread between the low and the high is very limited in most of the bets. And when the spread is so low, there is no point in taking positions. They may not give any profit. That is what I am trying to tell you. The name drive. How to know euro is the higher level or at a lower level? As you indicated, don't pay attention to that on the price level. No, you know that euro went up to 1.4670 and things like that, and then subsequently met the drop. But it doesn't matter. As far as an intraday is concerned, it has formed the high 1.4356. The high has not been breached once it is formed from the start of the session. So there is a likelihood that it could make the slide. So that way, about 20-30 pips swing trade, sell and buy trade, you can do it. But if you try to take more positions after the drop, then you have to be very, very careful. You have to keep stop at entry and quickly grab the profit when they drop it. And instead, because from 1.46 or 47 it has dropped, so there is a likely chance that it will go to 1.40 and try to take about 10 lots or 15 lots sell. Then if they are not dropping, you will become really afraid. So who are the first one to get afraid in the market? The over trading traders. So beyond their capacity, straight away they take about 5 lots, 7 lots, as if they are going to earn in this, and this is going to be a definite move. And such traders, when they commit the positions, the players can visibly see all such sellings. And so when everybody is selling, the players have to necessarily buy. Otherwise the market will just like that go down. No buyer will be there. And if you go on lower the sell order, there won't be any buyer. And no trade will happen even though the market drops. So somebody has to facilitate the market. So when somebody, predominant of the traders are buying, someone has to, selling, and other set of traders have to buy it. And when the market sentiment is bearish, everybody is afraid of buying, then they are all willing to sell. Then the players buy it. After buying it, they are having the money power, so they can just use a rumor or any such trigger or an interpretation to the data release and quickly gain about 30-40 pips. And the people will come for the short covering. Those who have taken huge positions. That is why I always say that avoid taking more positions beyond your capacity. And also keep in mind that market will give always a better trading opportunities rather than a level at which you think that it is a good level to sell or a good level to buy. So the best solution for it is spread the risk. So if you want to take a sell, take one lot sell or one mini lot sell. In case if they gain about 50 to 60 pips or 100 pips, take another sell. And that way if you try to do it, your spreading of the risk is very nice, so that when they even make about 40 pips drop, you'll be able to see that overall all the positions make a net profit. You'll be able to exit from the market very quickly. And many traders, they don't believe in it. Instead, they wanted to just like that take the position and wanted to see in a matter of 2 hours a big profit. And market is not the place wherein you can make such trades or gamble all the time. Then Eric, you said wait until Wednesday, Asia or European to indicate a buy. Yeah, wait till Wednesday. Let Wednesday come, then I'll tell you where you can do the buy and things like that. Even if I tell you Wednesday during that of the late European session you buy, you may not remember. On Wednesday you will ask me. So you try to trade today. Then Anil, can you please explain the levels on the charts? I don't use the charts, sir, because invariably you don't find the fine-tuned highs and the lows shown in the chart. And if you see the 15 minutes chart, the 15 minutes chart will try to take only the bid level and try to show a lower level, and you will not be able to fine tune like looking into that of the live market quote page. So it is something like a university teacher, you are expecting him to come to your place and teach. So instead you go to the university and learn. So when the entire world is practicing in terms of the GMT time, and also those who are using the chart, they use different time frames. They are not using a single time frame to ascertain. So why there is so much of usage needed? So you have to see the 3 minutes chart, some see even 1 minute chart, 2 minutes chart, then 5 minutes chart, 15 minutes chart, 30 minutes chart, 1 hour chart, 4 hours chart, daily chart. How many charts you see to ascertain all those things? Instead, you just look into that of the live market quote page as a single source of information. You get all those informations which are needed for an intraday trade. I do not want to give any more explanation on this, please, because that may lead to controversies. This is my objective of using only the live market quote page for the trading. Then further, gold is holding well, no major correction on drop. Is it likely to continue? Yeah, gold is expected to slide along with that of the silver in this week. Devangam. The sideways move in this week could be in a range of 150. You may not come across 150 pips in a single day in this particular week. The traders are little cautious. They are not committing at the moment the positions. So let me go back to that of the PowerPoint presentation. So Japanese session, little bit of volatile moves. They could breach the high and the low, but they may not make any big headway during that of the Japanese session. Then European session, a small swing, high level swing, and the slide could happen. US session again, a small swing and the higher level, and then slide can happen. And the slide will be very, very nominal. We may not come across 150 drop and things like that. It happens to be a holiday in Europe. It's a natural process. So the volume will get reduced. And so in that process, we will be able to ascertain by tomorrow what is the week beginning false move. Then we can fine tune our forecast. Then with regard to the initial lows and the high set, Euro set the low of 1.4293, the high was 1.4356. They are not breached. Then GBP 1.6217, then high is 1.6244. They are not breached. Then CHF 0.8413 and 0.8467, just 1 pip in the case of CHF. Then Yen 8024, 8067, not breached. Then Australian dollar 1.0523, 1.0562, not breached. Then Canadian dollar 0.9768 and 0.9796. See, just a narrow spread of 14 pips or 15 pips. So in about 18 pips. So it is better to avoid taking positions in such currencies wherein the spread is very, very narrow, because you may have to wait for a long time to earn about 15 pips or 20 pips. So whenever the momentum comes in the market, you try to commit positions and try to earn. And after taking a position, you expect the market to move, and the market is not moving because of its own reasons, then you lose patience. So that's what I can tell you. So you calmly wait for a good opportunity to enter into the market rather than entering into the market and looking for the good opportunity. And that may test your patience. So I take this opportunity to thank FX Street and also you people who have come here to listen to my talk. And I'll post it in the blog and also give you updates if needed whenever good moves are seen in the market. And I'll be giving the information with regard to the downward move or the upward move in the blog. So don't think that I have given only the forecast here during that of the Asian session. Then followed by that, I will give the updates in the blog along with that of the forecast because there are so many who are not able to attend the Asian session webinar. So for their benefit, I am giving the forecast as well as the market reading. Then I'll continue to read the market and update it in the blog. Use it as a tool in your trading decisions. Thank you one and all. See you tomorrow.